Hello and welcome to the Weekend Investing Daily Byte of 19th of September. And what we had been waiting for, the Fed meet happened, 0.5% cut, and the markets were not very enthused about it. In today's DB, we will also talk about how India is moving ahead of China on certain parameters. We'll talk about that. But first, please subscribe to the channel. Where is the market headed? The market opened with a bang, went to nearly 25,600. 25,611 to be precise, but closed down at 25,415. So all the news of the 0.5% cut is already baked in, and the market now wants more to really go up. Otherwise, it's not interested. Nifty Next 50 took a dive down, came down to as much as 73,338, closing at 74,419. So recovery towards the second half of the day, but overall still down 0.7%. Mid caps down till the you can see till the support area here at 21621, recovery to 21965, and small caps also coming down towards the support and recovering back a little bit, still down minus 1.1%. So the prices basically had already built in 0.5%, and there was no surprise, and the speech of the Fed governor did not enthuse markets to go further. Bank Nifty also took a retest of the previous high and succumb to it, but although closing at 0.54% higher, banks obviously are benefited due to their bond book. Momentum trends, declines of 327 versus advance of 173. Clearly the declines have it today, and on the previous session FIIs have although kept buying 1153 crores. DII buying has dried up 152 crores only on 18th of September. Today's heat map, nothing much is in green except NTPC and partially maybe some FMCG stocks, Hindustan Lever, Nestle, etc. IT stocks down like yesterday, energy and uh, metal stocks also down. Kotak Bank was the odd one out along with HDFC Bank in the green. In the Nifty Next 50, all the finance companies, the PFC, the RECs, which were supposed to be doing well after a rate cut, did not do so. So again, a sell-on news here. Other PSE stocks like HAL, BEL, IOC, all losing ground. ABB, ATGL, GAIL were also big losers. Pidilite was up along with Dabur and SBI Life. ICICI General Insurance also up. So nothing really going up today, but mildly consumption stocks, private banking, FMCG, real estate and autos, mild gains. Public sector enterprise stocks now smashed down minus 1.6%. PSU bank smashed down 0.7%, metals down 0.6%, and pharma down 0.4%. So no real trend emerging after the Fed cut, and we are again in that doldrums where the market will be headed from here on because the trigger is already gone. United Breweries was the highest gainer among FMCGs stocks, 2130 at 4% up, and there were mild gains in Balram Chini, Dabur, Nestle, HUL, and Tata Consumers. In terms of the stock spotlight, you had KPR Mill ramp up almost 8.8% today, so some specific news must have been there. And if you see the overall chart, KPR Mills has really gone from nearly 60 rupees to 934 in the last 4 years, and quite a remarkable consistent rally is seen in this. On the topic for the today, India ahead of China. So MSCI uh, market index, which captures large, mid, and small cap representation across 23 markets. Here, the India weight has now crossed the China weight, and that is to somewhat it's a big news. The top 10 constituents here are, of course, from the US market: Apple, Nvidia, Microsoft, Amazon, and so on and so forth. So 18% has been pretty much allocatable to that. And within the country weights, you can see 63% weight is still with US, 5.8 is with China, with Japan, 3.5 with UK, 2.7 with Canada, 2.4 with France, and others are 22%. Within the others, you have India, which is 2.35%, and China is only 2.24%. So The MSCI World Index, which is followed by a lot of funds, is now allocating more to India than to China, and this is pretty significant. If we see the charts, if we compare the MSCI India uh, ETF to MSCI China ETF since, let's say, Feb 12 to Feb 21, then China was ahead 149% versus MSCI India at 73. And in the second phase from 2021 onwards, it has just been remarkably very different, where MSCI China has dropped 54%, whereas MSCI India is up 43%. For the calendar year so far, again, India is up 18% versus Chinese ETF at plus 1% only. If we compare India versus other emerging markets, MSCI India versus MSCI Emerging Market Fund, again, India fund is 154% up versus EEM, which is the Emerging Markets MSCI fund, at plus 26%. And India versus the world versus emerging funds since April 23 is where India again is leading at 50% versus rest of the world as 40.6 and emerging markets at 17.86. So all these charts have shown that India market has gone up very, very far ahead of all other markets, and some consolidation in India market, some maybe even time correction of some sort, or consolidation within a band, or some mild correction, and going sideways for some time will not really be really hard. I think that is the at least my expectation is that some consolidation should come, because we are running ahead of about above a lot of other markets, and these global funds will need to take a measured view in terms of where to allocate versus India. So this is all I have for today's daily bite. I hope the daily bite subjects that we are taking are of your interest. Please do let us know in the comments how you're liking this series. I am also not available right now in front of the screen, but I'm trying to get as much as possible onto the DB. Otherwise, my dear colleague Parikshit will be taking up these DBs. Thanks. Bye bye.